Hello, responsible people. This is Nicholas Luna, your favorite health insurance broker. But did you know I also sell life insurance? In life, there's two guarantees. You're gonna pay taxes and you're gonna die. Do you wanna leave your family with an inheritance or do you wanna leave them with debt? It's up to you. I'm gonna go over the two basic life insurance policies that you can purchase: term life insurance and permanent life insurance. So now let's go over the policies for life insurance. First one I'm gonna go over is term life insurance. Now, term. When you hear the word term, you kind of think like, well, is it gonna end? Is it only for a certain time? Yes, so when someone buys term life insurance, you're going to buy it for like a certain age, either age, let's say 65, 80, or 100. You can buy a really good policy, let's say $1 million coverage for about $20 to $30 a month. If you're healthy, you're gonna get a really cheap premium. If you're unhealthy, you're gonna get a more expensive premium. So back to the pricing. So about $30 a month, you can probably get a $1 million policy. And one of the pros about it is that it's really inexpensive. In the event that you pass away, your family is gonna be able to get that policy tax-free. Yes, I just said that. Your $1 million policy goes to your family tax-free. What would you do with the $1 million? That's life-changing. That's how most immigrants created generational wealth, is through a life insurance policy. So that is a major pro when it comes to a term life insurance policy, is that they're really inexpensive. And if you were to pass away, you're able to collect that tax-free. Now, some of the cons when it comes to term life insurance policy is that your premium does go up as you get up in age. It makes sense because your actual chances of you using it is very likely. So the insurance companies are like, all right, we don't want them to be on a term policy anymore, so let's go ahead and get them to drive up the cost of the premium so they can eventually cancel it. So that's a con. A second con is that it doesn't create any cash value. So if you're paying a premium to have this coverage and then you don't use it, then none of that money accumulates and you aren't able to, collect it back like a 401k. So there are some pros and there are some cons, but you just have to figure out which policy is going to work for you. The second type of life insurance is permanent life insurance. Then that would be a universal life insurance or whole life policy. Now, a major con with these policies is that they're a little bit more expensive. So we just went over the term and you get about $1 million policy for about $30 to $45 a month. Whole life, you're looking at about $300 to $400 for about maybe $500,000 in coverage, maybe sometimes less, but there is obviously some pros for that. So yes, you're not able to get that much of coverage, but here's a good thing. Your policy premium is gonna stay the same for the life of the policy. So your policy isn't gonna skyrocket when you get into your 50s or your 60s. Another pro is that this whole life insurance policy, if you get to the age of 62 or 65 and you don't use your life insurance, but you still have a $500,000 policy, the policyholder can sell that policy to another person. For example, let's just say all your mortgages, everything's all paid off, you got everything situated, so you have a $500,000 policy, you don't need it. So you go to this broker and you're like, hey, I have a $500,000 policy, I don't need it, it has some cash value, I'll sell it to you. But when I pass away, you get to inherit that income. Like, sure, how much do you want for it? All right, it's a $500,000 policy, it's accumulated cash value, so it's about, let's say $600,000. Is that how much it's worth? I'll sell it to you for $300,000. Sure, they make the transaction at $300,000 is yours at that moment when you sell that policy. So that's pretty cool, right? Another pro when it comes to having a universal or permanent life insurance is that you can borrow against it. A lot of people don't know this, but Walt Disney borrowed against his whole life insurance policy to create Disneyland. None of the banks want to give him any money. So if you're a small business owner, and right now everyone's kind of strapped for cash because of the pandemic, and you want access to cash and the bank doesn't want to give it to you because businesses are risky, they don't want to give it to a business, you can borrow against your whole life or your permanent life insurance policy, which is pretty cool. Doesn't affect your credit at all. And when you repay it, you repay interest back to yourself, very similar to a 401k. So those are the different types of life insurance policy. I went over just the very basics of it so I didn't lose you. Term life insurance, it ends at a certain age. Once you reach that age, you no longer have it, no cash value. Permanent life insurance policy, once you reach a certain age, you still have it, it's yours, you can sell it. Permanent term life insurance policies are really inexpensive. Permanent life insurance policies are a lot more expensive. So you got to find a policy which is right for you, your needs and your wants, your goals. So if you want more information, you guys already know where to find me.